in the month of May, which is about 15 days, foreign institutional investors have been net sellers to the tune of 37,000 crore. The same positioning in 2019 was negative, but 7,000 crore. And 2014, guys, it's not once upon a time, only 10 years, was 11,000 crore. So the FI positioning in the run-up to the election has been strikingly different. Bhasin Saab, break the data for our viewers. Are we in for a very sharp rally which could be fueled by foreign institutional investors who right now have a short exposure and they've been selling in the cash market, and if markets like the election verdict, we could see a monster bout of short covering, which is that foreign institutional investors will be forced to cover their positions?
Yeah, good afternoon. Well, I would expect something like that if the results come as per what the market is looking and you get stability. Because Nikuj, what has changed is that global cues have become very positive. The Dow is 40,000, China market is back, Indian macro and micro are looking good, rainfall is good. So I think in the bonhomie, the people who are missing out or who have, who are opting for China or whatever, there will be a huge bout of covering. I would take that as a selling opportunity. So I think domestics will sell heavily once the FIs come and you hit new highs. And I think that is very much on the card. I would say 80% probability.
Sanjiv, hi, good morning. Good to have you on the show. A lot of earnings to discuss, but let's first start with BHEL. The disappointment thereof, but the stock is doing its own thing and still buy ratings coming in from brokerages.
Good morning, Aisha. Well, that's the underlying asset which you had to play, that if power is in such a sweet spot, then power transformers and the EV conduit of electrification is going to be in the hands of 2-3 people. BHEL is the best made out for that. In the last 3 quarters, the same numbers have been there, but the stock from 130 has hit 320. So I think market is discounting 1 year forward earnings and the expectation that sooner rather than later it will turn the corner, in the sense the order book and the type of environment on power is a very big play. We had a buy on this around that 135, 140, but here we would not advocate a buy. We would rather play some of the rail stocks. Here we would say be a little cautious, wait out, hear the commentary and let some correction come in, because now you're chasing a parabolic rise which may not last for long.
Right. And Kunal, that's exactly what, right? The stock is what, up 4x in about 12 months, and analysts are still seeing a 40% upside from these levels. Would you say if you've been owning the share, book your profits now?
Well, not book your profits, but at least trail your stop losses in this case, because the momentum over here is just about some different level altogether. Because the stock, I think, in COVID lows was around 2022 levels. From there, it's moved to 300 plus mark. The rally in the last 2-3 months and the pace of this rally has intensified significantly for BHEL. And the stock apparently is heading towards a breakout, which is around the 350 mark. And typically we've seen that whenever such kind of fierce rally happens, it tends to break out of the previous major swing highs and then take a pause over there. So I think in that context, I would probably expect 350 to be a better level where traders could look to book profits.
Okay, Sanjiv, hi, morning. Let's also understand what your outlook is then on Sun Pharma in terms of what exactly the street is penciling in when it comes to their quarterly performance.
Yeah, good morning, Avan. I think Sun numbers will be in line because Taro Pharma has come out with very, very good numbers. That's a subsidiary of theirs. That means the overseas business is doing in prim and prime shape. And Taro's earnings were always a drag. I think that will be the highlight. Local businesses are doing well. Their US business seems to show extremely strong growth over the last 2-3 quarters. And I think in the last year, this stock has been an outperformer. So the price performance may be muted, I would say, but definitely on decline. This is one of the best performing pharma stocks, I think, and it should be added in your portfolio. Numbers will be in line, maybe a beat because of the Taro earnings.
So Sanjiv, what's your take then? The street is penciling in a pretty disappointing quarter when it comes to Paytm. On the flip side, Nykaa, it's expected to be pretty optimistic in terms of their profits jumping multifold. How would you look at some of these stocks?
So Aman, as a disclosure, Paytm and Z both we booked the losses which we had, or the marginal losses, because that's about 2 months back, 3 months back. We thought that there's no point fighting the trend, which is that both these companies came in under severe guidance pressure. Z was a total flop as far as Sony goes, and Paytm has too many regulatory concerns which may not change in the near term. We are bullish on Zomato and PB Fintech, but we trimmed our paces over there. For us, at this price, there is only one stock which we are very, very bullish, and for which I can give you the reasoning, the commentary, which I think is a doubler from here. So investors should actually focus on putting their money where their money can double, where the reasoning and the quality of earnings which are expected with the recent events will be very, very bullish. If you allow, I can give you the name of that company.
Let's welcome on board Sanjiv Bhasin then and find out what he's making of the market right now. Sanjiv, good morning. The talk of the town is Nvidia this morning, and Kunal was just telling me it was $2 as recent as in 2010, and now its market value exceeds the combined worth of both Tesla and Amazon. What could be that Nvidia stock here in India, Sanjiv?
Good morning, Aisha. I wish I knew so easily. And yes, that's history. So we all live in times which are very, very, exciting and changing, and you have to accept change. Just to tell you, Nvidia was $1 trillion 2 years back, and in 1.5 years, it's doubled from there. So, big is getting bigger, and that's why we are saying don't undermine the extent of change in IT, and that is. So if I had to say one stock which is closely remembering or may mimic that is Coforge. The recent acquisition of Signity Technology. Signity is an AI player, and it's very well placed in Midwest and North of America. And the recent acquisition gives them color all across America and makes them, part of the reassurance play over there. I think the prospects of this becoming a big play is very, very much on the anvil. As you are aware, the stock came down for the reason of the QIP, which they needed to fundraise. They had already made a provision that the fundraise would be taken care of debt. That was just a break. I think they've raised 10%. They've got a 10% oversubscription, 10 times oversubscription, because the price became so favorable. So I would put my money on Coforge, and I think that this stock can again revisit those levels of 6,000 once this acquisition goes through smoothly, and the prospect of the business, because this will be cash accretive from day one. And I think these Signity Technologies could be a game changer for them as far as North America goes, and their presence into AI-led business over there.
Okay, that's interesting. Coforge, a stock that you've liked for a while now. But what is that one large cap, Sanjiv, which you think could give us those mega returns in, say, the next 2 to 3 years?
So I am putting my money on HDFC Bank. I think all the pessimism and the over ownership is more or less plateaued. And if you are looking for growth, once CDR and deposit ratios start to do well, I think the lion's share of the business will come to HDFC Bank. So next 2-3 years, and you will not get a turn of tide so fast. But if you are patient, then you are getting one of the best banks, so the best performer in the last 20 years, available at very reasonable valuation. So that, according to me, is a large cap pay. And in my mid cap special is India Bull Real Estate. As you're aware, yesterday the fund which they raised as far as the QIP has gone through, and the funds are now coming in have come in the company. The company is going to be new named Equinox. It is purely going to be the flagship company for Embassy Real Estate. And Embassy, by the way, has delivered more commercial buildings and real estate of 2.9 crore than even DLF. If there is a next DLF in the making, it is India Bull Real Estate. Right now, it may look small, but I think in the next 2 years, it has the potential to become a mid to large cap stock over the next 2-3 years.
The other talking point actually, Sanjiv, is the massive heat stroke that we're seeing, and I'm sure you're probably melting away much as we are back home. But maybe if you don't want to talk about that, there's also other stocks that are in the spotlight, and then the likes of a Jubilant Food, for instance, as well. What have you made of the quarterly performance and even the kind of commentary coming in from the management?
Yes, Avan, it is really sweltering here. So no two ways about that. And with age now, the heat becomes a pain. And so I am in Bombay for the next 2 days, going to Nasik, and hopefully maybe better times over there. But I think even Maharashtra is going through a very, very, dry spell as far as heat goes. So humidity will be there. I thought Jubilant numbers are reasonable, but I don't look out for Jubilant. My top play there is Devyani, and I think Devyani has cushioned all the weaknesses of the provisioning. I am very, very confident on the way Costa Coffee is now eating into market share of Starbucks. It is increasing in presence in Pizza Hut, and the whole range of QSR is doing extremely well. So my money is on Devyani. It has been a slight underperformer, but that's the whole nature of the business. All of them, even the Jubilant numbers were no great shakes. I would rather buy a Devyani on the valuation multiple, and I think this can be a very, very sweet play over the next 1 year.
Sanjiv, a bunch of these, defense companies, of course, led by BHEL, a stock that you like, have come out with a very good set of numbers. And I was just looking at Garden Reach numbers, for instance, as well. Huge margin expansion is what they've seen. Where is it that you still find opportunity to buy afresh? And more importantly, given the run-up that you've already seen in defense as well as railways, would you say that after a positive election verdict, these segments could go into some sort of consolidation? Or do you think they will further see a heightened uptick?
So Aisha, like I said, the euphoria will come if the election verdict is positive and PSUs will be on the charge. But you've already seen that the market is behaving very maturely. It is discounted that, whatever the verdict, these are going to be stocks or sectors which are going to outperform. But the valuations, Aisha, unfortunately, leave no place for comfort. Whether it's a Hindustan Aeronautics or a BHEL or a Bharat Dynamics, all three are in our portfolio. We see no room of safety of numbers on the upside. We think everything good is priced in. The government's budget and so on will be the fourth year. But if you are looking for a regular play, then doing a SIP will be better. But I would not say go whole hog at this price. There is a left out feeling, but we have selectively booked profits in PSUs, particularly the Nike, some of the our doublers and triplers in the metal space, Vedanta, Nalco, Sale. I mean, these have been huge outperformers. So we've taken some chips off the block. We would rather sit on cash or get into blue chips like Lever, Marico, Hindustan, HDFC, or Coforge. So we are reshuffling. To sum it up, Aisha, I think just nibbling in right now is okay. And if you do a SIP, it's reasonable. But to go whole hog in any of the defense or railway stocks would be a little bit overrated because the price is not in your favor.
If you like this video, then like, share and subscribe to ET Now.